Hey there. Today, we're comparing two of the most popular investment options out there, index funds versus ETFs. They're both great for wealth building. They're both loved by passive investors, but they're not exactly the same. And knowing the difference can help you invest smarter. So let's jump right in.
Welcome to Personal Finance Cat, where I share my personal take on personal finance.
What are index funds and ETFs? Let's start with the basics. Index funds are mutual funds designed to track a specific index, like the S&P 500. When you invest, your money is pooled with others and automatically spread across all the companies in that index. One example is Vanguard 500 Index Fund or VFIAX. ETFs or exchange-traded funds also track indexes, but they trade on the stock market just like the individual stocks. You can buy and sell them anytime during the trading day. One example is SPDR S&P 500 ETF or SPY. So both offer instant diversification, low fees, and passive growth, but they behave a little differently. Let's break down the differences to help you choose which one is right for you. 1. How to buy and sell. ETFs are traded on stock exchanges. Buy or sell anytime the market is open. Index funds, however, are bought directly from investment companies like Vanguard or Fidelity. Transactions happen at the end of the trading day. The winner will be ETFs if you value flexibility and real-time trading, but the winner will be index funds if you like a set-it-and-forget-it routine. 2. Minimum investment requirements. For ETFs, you can buy in for any amount, especially with fractional shares. For index funds, however, it often requires minimums, like $1,000 to $3,000 for some Vanguard funds. The winner in terms of minimum investment requirements is ETFs because it's more beginner accessible. 3. Fees and expenses. Both have low expense ratios, often below 0.1%. But index funds may have higher minimums or transaction fees at some brokers. ETFs are generally cheaper to hold and trade, especially in commission-free brokerages. So the winner in terms of fees and expenses is also ETFs, but it's very close. 4. Tax efficiency. ETFs are more tax efficient due to a unique in-kind creation/redemption process. Translation: less capital gains tax triggered during the management. Index funds are still tax-friendly, but not as efficient as ETFs. So the winner when it comes to tax efficiency is ETFs for taxable brokerage accounts. 5. Automation and dollar cost averaging. Index funds. Easy to set up automatic monthly investments. ETFs are harder to automate without buying whole shares or using fractional features. So the winner when it comes to automation and dollar cost averaging is index funds, especially if you want to automate investing. In conclusion, which one should you choose? Here's the simple breakdown. Choose ETFs if you want lower minimums, you like trading flexibility, you're investing in a taxable account, you're using a modern app like Fidelity, Schwab, or Robinhood. But choose index funds if you prefer automatic investing, you're investing in a retirement account like an IRA, you don't need to trade during the day, you're using platforms like Vanguard, which support index fund investing well. Pro tip: you don't have to pick just one. Many investors use ETFs for their taxable accounts and index funds inside retirement accounts. You get the best of both worlds. Here's some bonus material. Examples of each. Want to know some favorites? The top ETFs are VTI, which tracks the total US market, VOO, which tracks the S&P 500, QQQ, which tracks NASDAQ 100. Top index funds include VFIAX, the Vanguard S&P 500 Index Fund, SWTSX, the Schwab Total Stock Market Fund, FXAIX, the Fidelity S&P 500 Index Fund. They often track the same index, just in different wrappers. Final thoughts. Both index funds and ETFs are awesome tools for building wealth. The right one depends on your style, your platform, and your goals. Remember, the most important thing isn't which wrapper you choose. It's that you start investing and stay consistent. That's it for today's episode. Whether you're a team index or team ETF, the key is to put your money to work and let it grow over time. If this helped clear up the difference, do me a favor. Subscribe, leave a review, and follow me on YouTube and other social media. Until next time, stay invested, stay curious, and keep your claws sharp.